There was a point where your next time report was in 2012 and it was called All In or Fold. Why was that big deal in that time frame?
Well, we had really started to deteriorate in price in '08, and it just went down, and then it stayed there. So from 2008, 2009, a lot of the price damage was done, but now you're at a price that's half. You don't have any upswing, and it's camping out there with people getting paid $8,000 to buy one. So my daughter, Sarah, had an $8,000 check from the government that she got so she could buy a $350,000 house for $100,000. That's how much they were motivated to try and get somebody back into wanting real estate. And it just kept on sitting there, and the price from the national number to the California number had never been that close. And I just played devil's advocate. I wanted to know, and maybe it's over. Maybe the differential from California to the national number is not going to be there anymore. So I studied all that, and I came out with the opposite conclusion, that it's all in. And as a lender, we created an 8-year program so people could buy in 2012 and finance it all the way to 2020. And I'd have to say we created our fair share of multimillionaires doing that. You know, the moodometer chart that we have is very gradual in process. You don't get euphoric in 2012. You're still afraid in 2012 and 2013. You feel a little better in 2014. And then by 2018, 2019, we're losing people that cut our hair again. It's a process, especially when you sell properties, you realize, okay, I don't have any multiple offers anymore. And when it was in the heyday, you knew by noon you were going to have 7 offers and you were going to sell it. That's a very big difference in confidence level of what you can get, you know?